Hi, this is Anthony Parent of Parent and Parent LLP IRS Medic, and thank you for joining us today. We have a special show. We have a panel today, and we're going to be talking about some recent updates with international taxation. The first is the Repeal FATCA movement that we're going to be discussing. And joining us today is Solomon Yu of Republicans Overseas. Solomon is a U.S. immigrant who made it big, and now he helps others live the American dream. Solomon is one of the people responsible for putting a Repeal FATCA plank into the Republican platform. Solomon, how are you doing?
Wonderful.
Thank
you for having me.
You bet, Solomon. Thanks so much for taking the time. And I know you're in Japan and it's up late at night. Thanks for joining us. We also have Kathleen Mistry joining us today. Now, Kathleen, why don't you tell us a little bit about yourself?
Well, I have been in international business development 28 years. I had a company earlier that closed. I closed it a couple of years back, and now we are fully going forward with Mystery Advisors, LLC, based in Virginia. And we are focused on helping American and Indian firms move into the Gulf region of the Arab world to expand their businesses.
Oh, that's fantastic.
We provide introductions, connections, set up from A to Z, and we'll help companies also come to America if they prefer, and do whatever we can to make sure that company is successful at this expansion.
Well, I'm sure you've seen a lot of the impacts then of what's going on. Thank you so much for joining us. We also have John Richardson. He was on recently. We had John on as a guest, and I will say that he's got quite a following. John's fantastic. And really, I think, I would say this. Unfortunately, we don't meet a lot of like-minded attorneys in the tax world, and many people in the tax industry might not be the number one advocates for their clients. Well, John Richardson is. John, thanks for joining us.
Thanks for having me.
Right on. And lastly, we have Keith Redmond, who actually organized this all. Keith has been everywhere and anywhere in the Repeal FATCA movement and really a global advocate, not just for the U.S. expat overseas, but also for the accidental Americans, so many of those getting caught up in this mess and not sure which way to go. Keith is really able to give advice that many in the tax industry aren't quite able to give. So, Keith, thank you so much for organizing this and getting us off. So where I want to start off is with the Repeal FATCA movement. Now, there's a few different things going on. Last year, we got together and we got in front of the House Ways and Means Subcommittee there, and we were trying to make a push to get the Repeal FATCA to FATCA repealed. Didn't work. We were hoping it would get into the tax reform, but it didn't happen. But meanwhile, there was a lawsuit going on to repeal FATCA. So, Solomon, could you share with us what happened and what is the steps forward for repeal FATCA, if there's going to be another lawsuit or if we're going to be looking to sort of get rally the troops again to try to get a repeal?
Yes, Anthony. Unfortunately, the U.S. Supreme Court decided not to review our petition. We appeal Sixth Circuit decision on standing for all 7 plaintiffs. And since the High Court decided not to review the petition, that means we are done with this FATCA lawsuit. It only means we lost the battle, but we will regroup and win the war. Now, what we're looking for right now is a plaintiff actually paid IRS fine, FATCA fine, or FBAR fine, and now going through called volunteer amnesty program. Because if you go through amnesty program and you have to sign off, waive your rights to sue IRS again. Also, in an ideal world, we're looking for a plaintiff from following states: Arkansas, Iowa, Missouri, Nebraska, North Dakota, and South Dakota. As you know, those states are in Eighth Circuit jurisdiction. So we want to get a little circuit split going as well. So that's where we are.
Oh, fantastic. Well, hopefully
and Solomon, this is Keith Redmond. You had mentioned also, ideally, would it be good to get a foreign financial institution as a potential plaintiff for a reboot of the lawsuit? Would that be good?
Yes. And actually, the first FATCA lawsuit, we tried to find one foreign financial institute, and however, they are very reluctant to be a plaintiff. That's the reality of it. So in my mind, it's easier. Yeah, it's easier to find an individual plaintiff who actually pays for the FATCA or FBAR fine than ask a foreign institute to become our plaintiff.
All right. Well, thank you for that. So if you live in Arkansas, Iowa, Minnesota, Missouri, Nebraska, North Dakota, or South Dakota, and you have paid an FBAR penalty or a FATCA fine, and that would be a Form 8938, there's somebody who might be willing to help you out here. And I'm going to definitely look through our client base to see if we can find somebody who has who is in the circuit, who has ended up paying it. And it's really not, and this is not for someone who's paid a fine in one of the programs. This is not if you paid the OVDP offshore miscellaneous penalty or the 5% penalty for the streamlined domestic. So this is just somebody who's been detected in an audit. Now, I would also assume that if you did I would say if you paid an FBAR penalty as a result of an opt-out, that would seem to me, because you didn't sign that 906 closing agreement, that seems to me you also might be a plaintiff. Could you speak to that at all, Solomon, or do you not know the answer?
I don't know the answer, but I had a conversation with Jim Bob. The idea is the person who has not signed a settlement agreement with the IRS, because when you sign the settlement agreement, the person waives his right to sue IRS again.
Okay, well, that means I would think an opt-out would count, and I could talk with Jim Bopp about that, but I'm pretty sure they would qualify too, because there is not that agreement that you settle, that closeout agreement that you have. So that is the next step on the litigation. Now, is there any moves towards, and maybe Keith or Solomon, either one of you can answer this one, any moves to getting a FATCA repeal bill somewhere through, and how would that exactly work? Are there any ideas how this could possibly happen?
That one I'll have to defer to Solomon on in regards to a FATCA repeal bill. I can certainly talk about what's going on outside the U.S. in regards to FATCA. Solomon?
During last tax reform bill, Rand Paul put in a attachment basically to repeal FATCA. And that one, we did not have opportunity to debate. The reason is we were up against a 20-hour clock, and two amendments showed up and debated, both defeated. Then the remaining amendments could not move forward. So the opportunity is always there to submit a attachment, but we have to wait to see when we can do that again.
All right. Well, that's all right. We'll see where that comes up.
If I may interject, with what's going on in the U.S. in concert with that, we also have a number of initiatives that's happening outside the U.S. For example, in France, there is the French, if I may call it, the French FATCA lawsuit, in which we have the Association of Accidental Americans in France who are suing the French state in regards to the implementation of FATCA and that it is against the privacy rights that is outlined in French law. There should be a decision on that particular lawsuit by the end of the year at the very maximum. So we look forward to hearing that. In concert with that, the Association of Accidental Americans in France are now going after each of the French banks who are that are discriminating against U.S. persons, anyone who has U.S. indicia where they are being denied banking services. And if they do not cease and desist these discriminatory practices, which are against French discrimination law, they will be individually sued. Now, John Richardson can talk about what's happening up in Canada in regards to FATCA. One last point. France is kind of the bellwether, if you will, in Europe. We also have initiatives that are being started in Belgium, the Netherlands, and now in Italy. And those are moving forward, and we're helping them as well. And maybe John can speak on what's happening with the Canadian FATCA lawsuit.
Yes, absolutely. In fact, it's moving right along. We created a nonprofit corporation, the Alliance for the Defense of Canadian Sovereignty, which brought a lawsuit against the government of Canada for its complicity in implementing FATCA in Canada by assigning the IGAs and actually changing Canadian law to make what used to be a form of discrimination that was illegal to make it mandatory. In other words, to instruct the banks to essentially do a hunt for U.S. persons in Canada. It's been moving along. The wheels of justice, as you know, do grind slowly, but my information is that this will actually be heard in the Federal Court of Canada in January of 2019. So we've been at this for a number of years. It's definitely in the courts. It's definitely being heard. In fact, I think by 1 week from today, the government of Canada has to have its expert witness list to us. So at least in terms of things happening, there's probably more happening in Canada than anywhere else in terms of tangible moving forward.
Oh, that's fantastic. So there's really...
And if I may just add one point, Anthony, I'm sorry. If I may just add one point, which I was remiss in sharing, is that Fabien Lahagre, who is a French citizen, who is an accidental American, is the founder of the Association of Accidental Americans in France. And there has been every single week publicity about about accidental Americans in France and the terrible situation they are in as a result of FATCA.
All right, so there we have a worldwide opposition to this. That's fantastic. So we can't rely on just one thing. We got to attack it different ways, and I love hearing that. Now, Kathleen, how is this FATCA impacting your clients on this? And have you heard of anything else that maybe we haven't heard of?
Yes, I have. It's reduced the amount of executives being hired overseas. People from other countries don't want to open up their books for an American government audit. And therefore, Americans are being eliminated from some very high-profile jobs that could be quite useful and beneficial to bringing jobs back to America to then send back to Europe or wherever. It's quite devastating if you look at the total numbers over 25 years, say. And we really, really do need a change in this. I do know that after the April 27th of 17 hearing by Meadows and assisted by Maloney on the Hill, that a consensus was established that day to see if we could look into just a revision of FATCA and not starting from ground zero, which we all felt that might be quite useful considering how long it takes to get a new law passed. So that was also a lot of discussion was held on that in 2017 by the Aero Board.
Okay, well, that's fantastic, and I think that's this is one of the things that we're seeing here with the we have FATCA. I think regardless of your political stripes, if you are someone who has international, if you are something who is international, everybody can find something they don't like about FATCA, and I think that's one of the things that really and I think we're living in a political age where people are divided but there's not too much division over the reality of FATCA, that we have this incredibly onerous reporting requirement that doesn't necessarily result in a lot of revenue for the IRS. And I remember John, the last time he was on, he had a great insight. He goes, the number one victim of FATCA is actually the IRS. Now, John, could you just sort of repeat your rationale on that one?
Well, FATCA is, of course, the tool to enforce what some people call citizenship taxation, but really is the policy of the United States of imposing the Internal Revenue Code on residents of other countries. And, of course, this is incredibly complicated to do. It's an incredible time waster for the IRS. The combination of all the rules, by the time it's all said and done, largely means that, a lot of the people don't owe any U.S. taxes anyway. That is a lot of the people who actually file, although the people who do owe taxes tend to owe rather large amounts. And so, given an underworked IRS, given the, low rate of financial return on this, and then we add to this the unfairness of it, the fact that it makes the U.S. an outlier in the world. I would say that the IRS is absolutely victimized by this, by Congress. Other individuals are, and et cetera. But there's no doubt that this is not that is a very good way. It's a very good use of the IRS.
I think it's a good time now to move on. When we're talking about other big problems around the world, this transition tax, we call it Section 965, and it's something that my own attorneys at this firm, we've been scratching our heads and we've been having meetings trying to figure this out. And John, you and Karen Alpert, who has been a guest, she's a phenomenal, very intelligent person. You guys have a video up, sort of going into it, what the transition tax is. Why don't you, now I would just say this, the transition tax, as far as I understand it, is sort of a tax on retained earnings that a U.S. person might have in, say, their corporation. Now, the problem is pretty much any limited liability entity overseas is considered a corporation. It's something that you're not really able to put on a Schedule C, but rather you have to go through a very onerous, typically on a form 5471, which is very onerous, and the penalties for not getting it exactly right can be stifling. So, John, why don't you tell us a little bit about the transition tax, and I will give a link to your video that you have up there. So sort of what it is, the problems with it, and what do you think going forward?
Sure. A tall order indeed, in a limited amount of time. In a nutshell, what the transition tax, if you want to call it a tax, is actually a provision of the Internal Revenue Code that requires certain U.S. citizens who are carrying on business outside the United States through a foreign corporation or a non-U.S. corporation, a dentist in Canada, for example, a plumber in England, this sort of thing, is actually required to, step one, determine how much money has been left in the company as of 2017. They have to go back to 1986 to determine that. So the first step is to figure out how much money is left in the company from 1986. What retained earnings might be sort of a proxy for that, but what they call it undistributed earnings in the statute. And note, by the way, that these undistributed earnings were never, ever subject to U.S. taxation before. Step two, once you've calculated that, you're required to pay a percentage of those retained earnings. It's just a straight confiscation to the U.S. Treasury. It's not based on any realization event in the sense that normally one would expect that a tax would be imposed when something was bought or sold. This is imposed for no reason other than that there happen to be undistributed earnings in the company. And secondly, note that it is absolutely, it's a retroactive confiscation or tax, if you want to call it that. Because I emphasize again that these earnings were never subject to U.S. taxation before. That is perhaps a bit of an oversimplification, but it does explain what this means for U.S. citizens living outside the United States who have been dutifully and lawfully complying with the provisions of the Internal Revenue Code, including filing these forms 5471. So it's a gigantic problem. So that's what it is. Now, how does it work? It's extremely technical. If there's any tax practitioners listening, the answer is that it becomes a subpart F inclusion. So all of this income is, you kind of have to throw it on your tax return for most people for the 2017 year. There is a slight reduction, okay, but without getting into that, it's a one-off tax in 2017. People are given 8 years to pay this out. Now, this also obviously applies to individuals who have control foreign corporations who live in the United States. But the difference between the way it impacts individuals in the United States and individuals outside the United States is that individuals outside of the United States are subject to double taxation. So this will result in double taxation. So it's a terrible, terrible thing for Americans abroad. Many of these people, particularly in Canada, just because of the nature of the financial planning culture in Canada, are actually using these things as private pension plans. So the bottom line is that what the transition tax means in effect, in practical and simple contextual terms for Canadian citizens who are subjected to this, is that their pension plans are largely being confiscated by the IRS. Contrast that to a situation for a Homeland American. Because there's a lower amount included, which means that it's taxed at a lower effective tax rate, and that once this is taxed, it can never be taxed again. From the point of view of an individual in the United States, it's actually a pretty good deal. Okay, I mean, they may not like it, but it's not the disaster that it is for Americans abroad. They're not subject to double taxation. So what it really is from their point of view, that is the point of view of Americans inside the country, is the early payout at a lower tax rate of income that would likely be subject to taxation anyway. Of course, in the case of Americans abroad, the income would be subject to U.S. taxation, but only once distributed, okay, and then it would also be offset by foreign tax credits. So tremendously complicated, incredibly unjust, by far the single most egregious violation and harmful aspect of the U.S. citizenship-based taxation I've ever seen. In my view, this does violate the U.S.-Canada tax treaty for various reasons, and I hope within the next couple of weeks to actually have a complaint in front of the competent authority in Canada to perhaps illuminate this a little bit. So that's the best I can do in a short clip.
Well, I think that was fantastic. Thank you for explaining something so difficult. And we do have April 17th that's coming up, and June 15th coming up for expat filers. But there was a delay on the collections of that might be delayed again. And I think, Keith, I think you were the one who shared that with me.
Yeah, it's through the works of a gentleman by the name of Monty Silver in Israel. He is a U.S. tax attorney there. There is a delay of a couple months, which can be a good thing while it is hopefully going to be worked out. I think Solomon would be a better person to talk to as far as what the possible next steps are to remedy this situation. But before I turn it over to Solomon, I just wanted to state that I posted on the various social media platforms, including the American Expatriates Group, a call to action for Americans overseas with small businesses that they need to write their respective congressmen, congresswomen, and their 2 senators in the states where they are registered to vote, and to let them know what this transition tax that John outlined will do to them, the adverse effects, that it will bankrupt them, and to send in photos of their business and to share what their business is about, because we need to have more voices heard so that these congressmen and senators can in turn send these letters or emails to either the Senate Finance Committee on the Senate side or the House Ways and Means Committee on the House side. Very important that we get Americans overseas with small businesses to take this action. But I would going to defer to Solomon as far as any possible next steps to try to remedy the situation.
Yeah. So Solomon,
yes.
Solomon, I just want to interject real quick,
right.
Because we have someone who can help out. Because the first thing that I see when I go to aaro.org is how to vote when you're overseas. And so Kathleen, thank you for putting that information up for everybody to see when you're voting overseas. The first, you go to aaro.org. It's the first banner you see of how to go ahead and make sure that you do get a voice heard overseas. So now, Solomon, why don't you talk a little bit about now the way forward for this transition tax?
With John's help, and I actually put a PowerPoint together for the White House and also explained to them that a couple of things happened. One, lawmakers didn't understand the difference between multinational corporations and your pop mom-owned corporations. But with John's help again, and he gave me a example of Apple, wholly owned foreign subsidiaries versus Apple independently owned operations overseas. And with that in mind, basically I showed them that after Apple wholly owned foreign subsidiaries pay 15.5% transition tax, their future foreign earned incomes totally exempt. However, that is not the case for independently owned Apple operations, those owned by overseas Americans. And they realize, oh my God, they realize that now. Second thing is, what is the best way to approach this? So I asked for a extension. That gives us time to pass territorial taxation for individuals. Remember, during last tax reform, the territorial taxation for corporations moved forward, and we could not get a JCT score for our territorial taxation for individuals. For that reason, we were not part of last tax reform. So that is how individual owners of those corporations being treated and how those multinationals are being treated. So we want to push through territorial taxation for individuals again, and Grover Norcrest and working with RO already asked Congressman George Holding to draft a TTFI bill. And the bill is in the last stage. I expect a final version online being done, and then we will have opportunity to review that. And after that, JCT is going to score this.
And that's the critical thing we were missing last time. We had no score. And my understanding of it is that the tax reform needed to score under 1.5 trillion in order to be passed for reconciliation, and that's kind of why we saw this strange process and a rapid signing of a bill that maybe people didn't understand all the implications of. So that with that score, then we'll be able to really. Then it sounds like it has a really strong chance of getting in there, doesn't it, Solomon?
That's correct. And this time is going to be a stand-alone bill, and it's going to be very, very helpful to overseas Americans. As a matter of fact, I had a meeting with Chairman Kevin Brady of the House Ways and Means Committee. He is totally committed to get this one done. If you remember, after House passed the tax reform bill, Chairman Brady gave Congressman holding some time to talk about what we should have done for overseas Americans, but we couldn't this time, but we will be back, more like a rain check for us, right? And after I talked to him, definitely he's committed to get something done for 9 million overseas Americans.
Well, that's fantastic. And Kevin Brady is basically the person who spearheaded the whole tax reform. So his word is going to probably mean quite a bit. So that's absolutely fantastic. And I think that if we do have, the TTFI, sort of negates the applicability of FATCA, at least as it relates to the person living overseas. There's really not much purpose behind it. While I guess there could be a theoretical purpose for somebody who lives in the U.S. and has accounts or assets overseas, there is the FBAR reporting that has been part of the Bank Secrecy Act of 1970. So I'm sort of starting to see maybe we just don't need FATCA at all. That the rationale is sort of gone. Would John, would you agree with that?
Precisely.
Solomon, you agree with that, John? All of you, why don't you chime in if you think that would be possible or helpful?
I agree. I think I think it certainly would take one of the pillars of FATCA off the law with the passing of TTFI. There'd be no need for any U.S. citizen or U.S. person to have to, or the banks to deal with reporting the local accounts of U.S. persons. And then that way that could start, pave the path for removing this unconstitutional law.
John?
I think the answer depends on, precisely what you mean by TTFI. Certainly, any kind of tax reform that means that the U.S. would stop imposing taxation on residents of other countries, that is on worldwide income, including on Americans abroad, should mean that FATCA would not be onerous for American citizens trying to live outside the United States. If the idea, though, is that U.S. residents would still be paying tax on income earned or investment income earned outside the United States, then I suppose FATCA would still have a role. But it does seem to me that most of the noise about FATCA is coming from the residents of other countries who are impacted by FATCA, and for the United States to shift their tax policies so that they no longer impose worldwide taxation on that group of individuals. Therefore, FATCA would be irrelevant because there would be no need to look for that kind of information. I think a lot of the opposition to FATCA would probably dry up, and FATCA, if left in place, with the only purpose it would serve would be the only proper purpose it could have would be to find homeland Americans who are attempting to use foreign financial institutions to hide money. I do think that the main problem here is the tax issue, and I think the harm caused by FATCA follows that, not the other way around.
Interesting. Good points, John. Kathleen, and now how would a repeal of FATCA, or I'm sorry, how would a switch to territorial tax for individuals, and with it a sort of reduction of FATCA, making it really only apply to homeland Americans. Is this something that is sort of constantly you're running in counter to, or is this something that's sort of a mild issue?
No. This is a very significant issue for all expats. We need to take a firm stand together and to have our voice made as one voice. I think when you sit down to talk about taxation and banking issues, I don't care what party you're associated with. These types of taxations are contrary to any American, and they need to be adjusted. We have more benefits, even though we are living outside the United States. we should not have an extra burden of taxation.
Well, I think that's beautifully said, and that actually sounds... Yeah, go ahead, John.
If I may add to that, largely to reinforce what Kathleen is saying, I think it is absolutely vital that all people affected by this, all individuals, whether they're people who consider themselves to be U.S. citizens living outside the country, whether they're dual citizens who are impacted by this, whether they're so-called accidental Americans, and no matter what political party they claim to be a member of, has got to get behind one simple principle. And that principle is that the United States absolutely should not be imposing worldwide taxation on people who are tax residents of other countries and do not live in the United States. And what I'm seeing is, I'm not affiliated with a political party. I'm, I suppose, an independent. And what I'm seeing is that these political parties, in some cases, are trying to turn this into a political issue. How in the world can a U.S. tax policy that's been on the books since the Civil War possibly be considered to be a political issue? It harms not only Americans, it harms even more people who are citizens and residents of other countries who don't consider themselves to be Americans. It harms the IRS, as I said earlier. It harms U.S. exports by making it harder for, companies to send Americans abroad. It is of absolutely no positive benefit to anybody. It is, at this point, it is purely ideological. It's just a sense that, if people leave the United States, they should be punished for it. Interestingly, the level of taxation imposed on Americans outside the United States I emphasize, far exceeds the level that is imposed on people inside the United States. It is masked only by things like foreign tax credits, the foreign earned income exclusion. Basically, for people outside the United States, all of their assets are considered to be foreign or subjected to punitive taxation, including, for example, this transition tax that I talked about earlier as an example of that. Test it this way. An American resident living in the United States who has retained earnings in an American corporation will not pay a transition tax. A Canadian citizen living in Canada who happens to have U.S. citizenship who is using a local Canadian corporation will be subjected to this transition tax. I'll give you another example. Mutual funds. Templeton Mutual Fund, a U.S. resident in the United States who buys Templeton Mutual Funds inside the United States will not have that treated as a PFIC. A Canadian citizen living in Canada who buys Templeton Mutual Funds in Canada will have it treated as confiscatory PFIC taxation. This is bad for everybody, every institution, every entity, and everybody has got to come together in a nonpartisan way to end this once and for all.
Beautifully said, John.
I must concur with what John is saying 100%, and that's why, Anthony, this podcast is excellent. And to have you as a U.S. tax attorney to be in our court is very critical. We have together American overseas organizations. Obviously, we know Republicans overseas, but we also have American citizens abroad. And Kathleen on the phone from the Association of Americans Resident Overseas, ARO, who have come together to really support what John is talking about. We have to get rid of this non-resident taxation, a.k.a. citizenship-based taxation. And I think it's very important that we have the other American overseas organizations to also come to the table together so we can collectively have one singular voice. Absolutely critical.
Thank you so much. And now I would just say, so Keith, why don't you give the call to action for everybody who's not a part of who hasn't joined up with anything? What is the person who's sort of stumbling across this YouTube channel to find out, number one, they're surprised that there's worldwide taxation, and number two, they're surprised that the penalties are insane, and they're looking for a way forward. Keith, why don't you, I think you could do a good job of giving us that call to action.
Well, as I mentioned before, the specific call to action that's the most recent that has been posted on the various social media platforms, including my LinkedIn page, the group I founded, American Expatriates, on Facebook, as well as a number of other American overseas groups. is that initially is the transition tax. Americans overseas who have small businesses, again, need to write their representatives in Washington, that's their congressman or congresswoman, and their 2 senators, telling them about their small businesses and why they will be ruined. And this is not hyperbole, why they will be ruined because of this transition tax. And that their letters need to be sent to either the Senate Finance Committee, should they be writing their senators, or to the House Ways and Means Committee, should they be writing their congressmen and congresswomen. That's number one, and that really needs to be done in the immediate. Americans overseas with small businesses need to take that action. Now, having said that, Americans overseas in general need to be writing their congressmen and senators about the territorial taxation for individuals and why, as John said, the U.S. needs to stop taxing tax residents of other countries and to put their support behind TTFI. Very important, regardless of whether it's a Republican, an independent, or Democrat. Doesn't matter. Americans overseas are all in the same boat and are being adversely affected by these laws and policies. So those are the 2 immediate calls to action.
Okay. Well, thank you so much.
Now, you can find more about it on the American Expatriates group on Facebook, and that will be put up on the information when the podcast is online.
Fantastic. All right. Well, I think that concludes. I just want to thank everybody. Kathleen, Solomon, John, and Keith, thank you so much for joining today. I think this has been incredibly helpful. And I'm getting a little optimistic here. I got to say, with the energy and the strategies, like, yep, we didn't get our wins last year, but we're still going. And I think, as Solomon says, we got that rain check with the writers of the law. So I think that counts for a lot. This is Anthony Parent of Parent & Parent LLP IRS Medic, and I thank you for joining us today.